Hi, welcome to this video, Dave, which is on the 28th of March, or on Sunday. We're just going to look at how to trade Forex fundamentals today to catch really big trends. Now, in terms of the pairs I want to look at in this video, they all include the euro. They're going to be euro USD, euro GBP, and euro JPY. We'll go over to the charts in just a moment. Now, in terms of our view of the euro, we're extremely bearish and have been since the turn of the year. The euro's gone down quite nicely against the GBP and also the USD. It hasn't gone lower yet against the JPY, but the big fundamentals and the sentiment towards the euro points to a trend reversal in the yen, or against the yen even, and more downside against the USD and GBP. Now we're going to go and take a look at the charts, but just before we do so, please do keep in mind, it is my view as of this specific moment in time. It can, of course, change in line with the market action and conditions. If you want all our trading techniques and our daily FX analysis of 14 Forex pairs, including the three we're going to look at right now, you can click on the link beneath this video and you can get live access to our member center. You can also follow us on Facebook, join our Facebook group of traders and check out our recommended regulated ECM broker. Right, let's go over and take a look at the euro in a little bit more detail. Before we do levels of entry, stop and target, I just want to look at the big fundamentals which we feel are going to drive the euro lower. Going to use the data from our member center. Just been doing some updates for the weekend. Right, let's go take a look at the charts. Right, first chart we're on is to do with bond yields, and if you're doing fundamental analysis, you want to know where bond yields are and what the expectations are for interest rate rises. Okay, now in terms of on this chart, we've got four nations, and what you can see is look at US bond yields. They're really soaring to the upside. Investors are seeing inflationary pressure build in the US economy. You've got a big, massive, well, not big, it's massive stimulus package from the Biden administration that will help the economy really gain steam. So the market is looking for interest rate hikes coming down the line. These are long-term borrowing costs. They're already rising. Now, the Fed have said, we won't be raising interest rates anytime soon, but they can't ignore bond yields. Okay, in second place, obviously the pound or UK bonds, but still a long way from the US. Then you got eurozone, and then Japan. In terms of bond yields, they're supportive for the GBP and the USD against the euro. In terms of Japanese yen, the bond yields where they are don't really matter. They're below eurozones because there's only one big fundamental we're focused on in terms of the yen, which I'll come back to in a moment, which I think will trigger a really big trend reversal. Now I want to go to my next chart. This chart here is really to do with the USD, or sorry, the USD against the euro. And what it is the dollar index, a dollar against a basket of currencies. And then you've got a line that shows the US v G9 countries and growth expectations. The US against all 9 countries. You can see the market sees the US economy doing really well against the others. Now, normally you'd have the currency responding to this. Look at the dollar index down here. Look at that gap. It's huge. That cannot continue in our view. This is very supportive of the euro going down on the USD. Of the G9 nations, expectations for the eurozone are not that great. And there's a reason why, which is the COVID impact, which I'll come to in a moment. But I want to go to my next chart, which is going to be this one. And obviously, when you're doing fundamental analysis, you want to look at the sentiment towards a pair as well. What is the trader sentiment towards the fundamentals? And this is the City Pain Index. Like I said, post this, the turn of the year. It shows speculative positioning in the euro, and I'll look at speculative positioning now as well. But you can see speculative funds really bought hard last year. There was the view that the eurozone economy would do well going forward. We didn't think it was going to do well going forward back then. It certainly isn't going to be doing well going forward now. Okay, you did see a little rollover from the 123 level, which we poked above. We're down about 118. That's a 500 pip decline, but there's a lot more to come in our view. If you look at these previous instances where speculators built up really big long positions, the euro broke down by 1,000 pips or more. I think it's going to do the same this time. Now, despite the euro falling, how do speculators view the euro? This is from the CFTC, COTNet traders positions. They've, in the last 3 months, they kind of lightened longs off, but they still remain fairly long in historical terms. There's more traders to get hit on stop and come out the market. This is against the USD. So this is another bullish chart for the USD against the euro. I want to go now to my last chart before we go look at some levels of entry, stop and target. This is basically vaccinations, and if we look at COVID, it's having a massive impact in Eurozone. They've totally messed up their vaccinations, and you can see the Eurozone nations down here. US doing considerably better, and the UK out in front. Okay, they've got to get their vaccinations together pretty quickly. Okay, they haven't sorted things out by September in Eurozone. There's no guarantee that they will. You're going to have another wave of COVID as the colder weather hits from September onwards. This chart obviously bearish for the euro against both the GBP and the USD. Right, there's some background. Now I want to go and look at the pairs individually and pick out our technical levels, or technical levels sort of resistance that we feel are important. And I'm going to start in terms of my pairs with euro USD. Right, we're just quickly going to look at the euro USD weekly chart before I go and draw my levels on the daily chart. It gives the big picture and the big levels. Now, in terms of in 2021, the euro obviously spiked up there above 123, came down, bit of a rally, then rolled over to the downside. We're over 500 pips lower this year. Now, in terms of the way the sentiment fundamentals look to us, we think we should get down to here, the 116 level. So the tail of this big blue and then these two bodies over here. But longer term, I'll be looking for even more weakness. So down to 110 to retrace all of that rally up before we got the sideways consolidation. The fundamentals are just so bad. On the City Pain Index, we did note that the previous euro corrections, when speculators built up such big long positions, were well over 1,000 pips, and I think this one could be. 117.93 closed down to 110. That's a good number of pips to come. We've already seen a decent decline. Could see a lot more. We shall see. Let's go to the daily chart. And I've already drawn my levels in on this chart. This level here, big, 119, second level resistance. Okay, I don't think it's going to get taken out. Euro's a little bit oversold at the moment. We could head for this level here, about 118.40. If we were to get up to this level, just sell back through 118. If we were to go up towards 119, to sell any weakness off the level. Okay, euro going to 116, then on to 114. Not 114, 110 in our view. Now, in terms of the ECB, we did look at bond yields earlier on, but a key factor to drive the euro lower will be the ECB have got negative rates and they're doing huge stimulus and they're increasing it. It's bigger relative to GDP than what the Federal Reserve are doing in the US. So all that printing of money, extremely bearish for the euro. I'm still surprised speculators are so long the euro, or still long the euro, when in our view the fundamentals are totally against it. Right, that's our view of euro USD. Now let's go and take a look at the two crosses. Right, we're on a Euro GBP daily chart. You can see where I've got my cursor, some really messy price action. That's when we had all those rumours about would there be a deal, trade deal between the EU and the UK. We thought that we would, and we got an entry at 90.10. You can see it there, bit of sideways, and just held it all the way down. It's about 460 pips. More downside to come in our view. You can see some sideways consolidation here. Obviously, we could break in either direction. My own view is we should break to the downside, but what if we move up? Move up above the 86 level, just sell back through it. Okay. You need to see the longer term chart in relation to Euro GBP to see the potential. And our view is the pound basically it's still deeply oversold for all the Brexit selling that went on. So yeah, it's not just oversold in the euro; it's oversold in a lot of other currencies. So we see significant strength in the pound. Our first target is here. And you can see it's these four tails: one tail, two tail, three tail, four tail that bounce from the 83 level. I think we should get there, but I think we should run on to 80. This big rise here to do with Brexit. Saw the euro soar. Longer term, we can even get back to 75, in my view. Pound is that oversold, but obviously, if we got to 83 or and even 80, I'd be very, very happy. So, pound deeply oversold. Sorry, I've gone to Euro USD. Sell a new low if you wanted to come in fresh. You can see our stop, but get above 86, just sell back through the level. If we did run on even higher, we would just trail our entry up, or you could trail your entry up. Okay, so very bearish of Euro GBP. It has been a really great downtrend, unlike Euro USD, where we've had to hop in and out. We haven't got the full 500 pips. This one has just been kind of just sit and hold it. Okay, Euro JPY. This one hasn't done what we thought at all. We thought the euro would go down at the start of the year. What does it do? It goes soaring to the upside, or a nice uptrend. Okay, we do get above 130, and we do sell off that level. You can see it 129.60. We do go down, then we come back up. We're risking 10 pips on our trade. I personally think this double trend line should hold. Also, in strong uptrends, the 20-day moving average will normally be below the price. If you're a bear, that's a good indication that it could go down if we snap and test to the 20-day moving average of selling opportunities. So if we don't break higher, I would sell back through this level. You can see it there, 128.80. What about if we broke one up towards the 130 level? I would sell off the highs, just sell weakness. I don't think we're going to roar away to the upside. I'm going for 126 and then 124. Now, in terms of the yen, the market hates it at the moment. Obviously, huge amount of stimulus from the Bank of Japan. Negative rates, bond yields, as we saw earlier, are poor. But that doesn't matter in terms of the yen. The big fundamental is its safe haven status. If bond yields continue to rise, that will create risk off, and money will flow into the yen. And speculators have already built up, a big short position in the yen. So, looking for this one to behave, for want of a better word. It's given us a little bit of grief, but we'll see. Three pairs to look at. Obviously, Euro USD, Euro GBP, just the big fundamentals, really, really bearish. Yen, we'll have to wait and see what happens. I'll be looking for a trend reversal in the yen. Anything else I need to say? I think that covers everything I wanted to talk about. So that's the video for today. Thank you very much for watching it. Take care and have a good day.